Ladies and gentlemen, welcome to the China Section Global Satellite Event Partner City in Shenzhen. This is Ying from UNCDF. In these sections, we have two panel discussions hosted by Mr. Kai Kelly from World Economic Forum and Ms. Angela Bai from China Alliance of Social Value Investment. Mr. Kai Kelly, please take it from here and start your section.
Thank you very much, and welcome to the session on digital financing for the SDGs. My name is Kai Keller, and I lead the work of the World Economic Forum on the future of financial services in China, here out of our office in Beijing. Welcome to a very timely discussion. 2020 was supposed to be the year of sustainability. We kicked off the decade of delivery, and then, of course, we were hit by an unparalleled health crisis and the global pandemic. So this session will offer an opportunity to take stock. Where are we as we move towards the end of the year? How can we balance the rebuild of economies and the regrowth of jobs with sustainability? Can we balance it at all? I'm delighted to discuss these questions today with an outstanding panel. We have three experts on this topic with us, and I'd like to welcome Aiaze Mitha. Aiaze is an emerging market fintech digital finance expert and entrepreneur. He recently co-founded Coconut, a startup that aims to provide aggregation services in the blockchain and crypto market. Aiaze is on the board of directors of several fintechs and financial institutions that are engaged in digital transformation. Aiaze, welcome to the panel. Glad to have you with us. We also have Judy Lee from Ernst & Young. Judy is currently working with climate change and sustainability services within Ernst & Young as a green finance leader in Greater China. She has been leading her team to provide issuance assurance services for green bonds, green asset-backed securities, social sustainability bonds, and other securities. Julie, good to have you. Very much looking forward to your comments. And we have Crystal Ge with us from Ping An Group. Crystal is a chief expert and in charge of group ESG-focused transformation, both on sustainable business strategy and management improvement. She developed the responsible investment and insurance strategy framework of the group. Crystal, very much looking forward to your comments. Thanks for joining us. Judy, I want to start this discussion with you. As I mentioned in the introduction, this was supposed to be the year of sustainability. I remember at the World Economic Forum's annual meeting in Davos in January, everybody was talking about sustainability and how businesses can contribute to the sustainability agenda. And of course, then came the pandemic and the economic disruption that we're all living through at the moment, no matter where we are in the world. Where do we stand now? As we rebuild economies and try to get people back to work, are sustainability considerations and the SDGs still front of mind for people? Can we do both? Can we focus on economic growth and the SDGs? Can we balance those two elements? Very much looking forward to your thoughts, Julie.
Thank you, Kai. Thank you for the question. Yes, COVID-19 has been a huge challenge for the entire world. So there is every single country have been influenced, and all the people from different kinds of perspectives, we have the huge impact covering from the pandemic. So how come we can stand now, and what we can do to recover back to work? So actually, I would think about this question from the other side. Well, COVID-19 is a challenge for us. However, from the other part, we can see it's also opportunities for a group of people. What kind of group? The group of responsible investors. Why I say that? So we have a data in April, from March to April this year, there are over 2,800 funds, PE funds, named ESG fund or responsible funds. And these funds, they have been reporting a positive result of an investment, among which there are 400 ESG funds reported that they realized excess return. Why? Why they could achieve this excess return? Because these ESG funds, they will not invest petrochemical industry, aviation, iron and steel, and other high energy consumption sectors. However, they are contributing to the industries of biotechnology, green sector, renewable energy, life science, and etc. And these sectors generate long-term value. And also, these sectors present very good result during this COVID-19 because people realize that under this kind of huge disaster, we need to focus more on sustainability. That's how we see that these over 400 ESG funds report that they realized excess return. So that's why I say for the COVID-19, it is a disaster. It is a challenge for the world. However, it's also a good timing for every single person to think how we can react, how better we can contribute to a long-term sustainability. So now, back to your question, can we do both? Focus on economic growth and SDGs? The answer is definitely yes. Yes, for sure. So this COVID-19 is a very good example for every single person on this earth to think about combination of economic growth and SDGs achievement. So there are many tools, or we say many ways to realize this SDGs achievement. For instance, from the perspectives of investors, institutional investors, they should pay more attention on creating financial tools to support the small and medium enterprises, SMEs, to recover from the influence of COVID-19. There are many ways, like the capital market. There are a huge amount of social bonds have been released early this year. So the social bond issued by the issuers based in mainland China, in Hong Kong, in Singapore, in other countries as well. And the investors from European countries, from US, Australia, Japan, they are very keen to contribute on this investment. So the financial tools will be very useful to support SMEs recover from the COVID-19. From the other side, for the entrepreneurs, they need to focus on ESG development while they are trying to promote the economic growth. To take care of the employees, to better provide trainings and internal support for the employees and the securities of the region. And also try to think about how to better, link the society with the enterprise development. So that's for entrepreneur to focus. And for the government, government need to think about how to better react, how to better issue a reasonable policy to support the economic recovery from the COVID-19. So we see many governments in Asia Pacific, in Europe, already issued several announcements, to further promote responsible investment, or to, reduce reasonable tax for some manufacturers. So these actions and contribution will support every single countries to recover from COVID-19. And for sure, back to the question, yes, we can do both. Focus on economic growth and SDGs.
Thank you, Judy. Love the positive tone you're setting here at the beginning of this panel. You alluded to a whole range of issues that we hopefully get to unpack a bit over the next 40 minutes, because there was a lot in there in what you just said. Before we do that, I want to go to Aiaze quickly, because Judy just made the case that a crisis is actually an opportunity, and the opportunity is in rebuilding businesses in a sustainable way, and being very conscious about aligning a business strategy with ESG criteria. And it seems like the United Nations and the Secretary General was a bit of ahead of the curve when he launched a task force on financing for the digital financing of the SDGs. And I would like to hear from you a bit. What were the major findings of that task force? I know there was a big report that was launched earlier this year. Where are the opportunities in this field?
So thanks a lot, Kai, and I'll try to be as short as I can. I think one of the big findings is that digitalization in many different ways is supporting the SDGs and could be supporting the SDGs even more. And I'm not going to talk about the financial inclusion story that I think everyone here is familiar with over 2 billion people using WeChat Pay and Alipay in China, and also almost 1 million banking agents throughout all the different regions. But I think there's many other things. And to the point that Judy mentioned, it would be impossible to have $1 trillion of green bonds if large data sets and rapid real-time data flows on use of proceeds were not becoming the norm. Carbon markets wouldn't exist without sophisticated digital infrastructure. And perhaps that's one of the areas where digitalization, and in particular blockchain and distributed ledger technologies, are really bringing a lot of innovation, completely disrupting the natural capital asset market, if you'd like. We see a lot of natural capital-backed digital assets being launched, from Carbon Coin to Cedar Coin, that really allow citizens to participate in climate mitigation and climate adaptation in many different ways, and channel their financing towards reforestation efforts and other conservation efforts that really matter to them. We've seen platforms doing a lot of things in that space as well, with applications like the Ant Forest application, but many others. And so in many different ways, these are ways in which digitalization has been contributing to the SDGs. In another space, perhaps, because of the fractionalized payments that digitalization allows, we see that digitalization and digital financing in particular have unlocked access to capital-intensive utilities around the world. And in developing economies, this takes the shape of pay-as-you-go models, rent-to-own models that really unlock access to clean energy, safe water, payment of education and health services. And in more advanced economies, it takes the shape of circular economy models that allows us to co-share the use of office spaces, of bikes, of cars, et cetera, et cetera. And then you see a massive surge in impact and investing, automated robo investing, that also allows citizens to channel their financing towards things that really matter to them in the long term. And so I would say, in short, the findings of the report were that in many different ways, digitalization and digital finance is already enabling the financing of the SDGs. Now, this could really be amplified in many different ways. And what the report did is that it also identified a few catalytic opportunities. And maybe I'll just mention a couple of them. And by catalytic opportunities, we mean really large scale, each one of them being trillions of dollars of that could be rechanneled and repurposed towards sustainable development in different ways. And one of them is to harness the growing pool of savings around the world. We are talking about $23 trillion of global savings that are available today and that are not being used necessarily towards sustainable development and development financing. And there's multiple ways in which one could think about, and I'll give an example later, maybe think about harnessing those savings towards sustainable development and financing of long-term infrastructure and long-term green finance as well. There's obviously a big role that digitalization plays, again, as Judy was saying before, in SME finance, because it helps solve the data asymmetry problems. It really helps perform due diligence and credit assessments in real time at very low marginal costs, and serve the credit need, the $5 trillion gaps of SME finance. And so these are sort of some of the findings. I don't want to be too long in this introductory conversation, but these are some of the findings that the task force has highlighted as major opportunities that could be pursued. And they're not just major in terms of size and scale and volumes. I'm talking about trillions of dollars for each one of these opportunities in terms of scale, but they're also major because they can actually shift the system. They can shift the entire financial system in a way that is more sustainability aligned and more citizen centric in a way. And so this is really what in essence, the report is about. Thank you, Guy.
Thank you, Aiaze. And again, I want to unpack some of these things as we go through the conversation. But let's just connect that back to what Judy shared earlier, because she spoke about the outperformance of ESG funds earlier this year and the inflows that we've seen into those products. And you, of course, spoke about robo-advice and how people can, through technology, take greater control of their financing and align basically their value set with where they're putting their money. But we're throwing big terms around here. We're throwing ESG around. We're talking about SDG financing. Maybe we should just clean that up a bit so for folks who are new to this, they understand what we're talking about. I'll try, and then you guys correct me if I get it wrong. But when we talk about the financing the SDGs, we talk about investing into companies that deliver products and services that help us reach the goals we set out in the Sustainable Development Goals. When we talk about ESG, we talk about criteria, environmental, social, and governance criteria that help us better understand potential risks that companies might face, and that are material, but that are non-financial risks. So it enhances our understanding of the risk exposure of a company. So they're two different things. But I guess we can, for the purpose of this short panel, agree that if folks take an ESG lens to their investments, they are also, by doing that, advancing the progress we could be making towards the SDGs. Is that a definition that you guys can live with? So just we get everybody on the same page?
Yeah, maybe I can define a little bit. So when we talk about ESG, it contains two parts. One part is for the company itself. It means that the ESG performance, that's what you just mentioned, the KPIs. Usually we say the ESG includes environmental KPIs, social KPIs, and governance KPIs. So this is a performance for the company. Another part is the ESG investment. That's how we say that the investors to select those companies or projects which contain very good ESG performance for investment, or they designed sustainable finance products like a green bond, like what our Aiaze just mentioned, green bond, social bond, sustainability bonds, or green loan, green deposit, green credit, and etc. So this is the ESG investment. So when we say there are two parts for manufacturers, ESG means performance, the company's itself, the performance. For the investors, usually they have a two parts, the performance itself and also the ESG investment activities. And those will contributing to the SDGs achievement. So when we say the ESG investment, we can calculate the environmental benefits, for instance, CO2 emission reduction, energy conservation, the reduction of water conservation, and etc. So all of these things will contributing to the SDGs achievement, as well as the social impacts. So generating jobs, gender balance, improve the percentage of female leaders in the company, or to provide affordable housing to rural region areas, or to provide education opportunities for children, and etc. So these social impacts will generate SDGs as well. So yeah, that's the definition between two parts.
Awesome. Thank you for clarifying that, Judy. I want to stay with you for a second, because you obviously, now that we have clarity on what we're talking about and the outperformance of ESG-focused investments that you spoke to earlier, when you work with companies and you try to help them understand the value of paying greater attention to ESG criteria, what sort of frameworks do companies employ to make sense of that? And what are the sort of strategies you employ to help them get their head around what this means for their business?
Yeah, it's a very good question. So for a company, we help them to work on 3 steps. The first step is to establish governance structure. So the company need to establish a ESG working group or ESG committee group. So usually the board of directors should participate in this ESG group. Some companies, if they pay more attention on ESG issue, the CEO himself or herself will be the leader of this working group. So we need to set up a structure at the beginning. So a ESG working group under the board of directors to provide the strategy, action plan of the company related to ESG. And then to focal point from different departments to join the group to take related tasks. So that's one part, governance structure. Second part, integration. The integration should include the ESG performance KPIs. For manufacturers, if they want to increase their ESG rating, which usually provided by rating agencies, they need to identify the materiality analysis. So which kind of KPIs will be more important for their company. So they do the materiality analysis, and then they need to work out an action plan to improve the ESG performance. This is for manufacturers. And for investors, for institutional investors, the integration means to increase the ESG investment, either to create more ESG investment products or to better integrate the ESG performance into their entire investment procedure. So this is for the integration. And the last but not the least is the reporting. For the company, no matter it's manufacturer or investor, the company need to do a comprehensive reporting with the detailed data. So the data should report their achievements on E, S, and G. And these KPIs will be compared between years. So we can easily see the achievements in different years related to CO2 emission, contribution to climate change mitigation, adaptation, contributing to the social impacts. And of course, we will link with SDGs. So that's the three paths usually we help companies to work on ESG.
Got you. Thank you, Judy. And you spoke a lot about manufacturers. I want to come back to you because you spoke a lot about entrepreneurs and startups, right? You talked about the sharing economy and where the opportunities are there. When you're very plugged into the startup world, of course, and you yourself are founded young companies. Within that community, how much awareness is there of the opportunities that this field provides? Of course, you spoke to some of these opportunities, and I think we're all living and using a lot of the technologies that that you spoke to already. But in general, is there sufficient awareness within the community of where the opportunities are?
Yeah, I mean, I would say depending on the markets where you find yourself, right? There is opportunity, there is awareness about the opportunity, obviously, around digital innovation and the difference digital innovation can make to people's lives, most certainly. Now, what we see is that depending on the markets, the alignment of the entire FinTech ecosystem and digital finance ecosystem with longer-term sustainable development objectives and national priorities might differ. And so I think it's a question of, on the one hand, on the supply side, there's a lot of entrepreneurs, innovators that are really building exciting products and exciting innovations, particularly in developing economies that really matter to the communities amongst which they live. And on the other hand, I think it's also about the government shaping that in a way by using a range of financial instruments and other instruments and tools, policy, financial, fiscal that they have in their hands to really influence the kind of innovations that they want and make sure that whatever the FinTech ecosystem produces is really aligned with your national priorities. So if your national priority is about green energy and clean energy, for instance, you want to make sure that you nurture a lot of pay-as-you-go models based on solar systems, etc., to really advance the green and clean energy area. If your priority is about sustainable agriculture, then you want to advance things that are based on remote sensing, satellite imagery, and other tools that allow you to do real-time credit and design real-time field-specific, crop-specific insurance products. If it's about SME development, then obviously you want to advance SME finance solution. So it's really about shaping that ecosystem and connecting it to your national priorities, and allowing then all sorts of entrepreneurs to come up with their own innovations. And that's one of the things we are trying to advance here with a number of countries in this interconnection or interlinkage, if you would like, between national priorities and how you shape the entire innovation ecosystem.
Yep, that makes a lot of sense. I want to come back to the policy question in a bit. But Crystal, glad to have you back. Of course, Ping An is a massive technology company here in China, and Ping An itself has incubated a number of very successful Chinese startups. When you think about the SDG space, what technologies and products do you see as particularly promising in delivering on the ESG agenda? What are you focused on at Ping An?
Oh, thanks, Kai. I'm so sorry. I lost myself almost half of the session, but luckily I catch up. Because Ping An, if you look at this group, it's a kind of finance plus technology, especially. So we have committed to achieving SDG goals through our dual engine, which I have mentioned just now. But today I want to talk about more on technology, such as I will give you some examples. The first one is One Connect. I think a lot of the audience, especially the audience in Singapore, they are very familiar with One Connect. It is a company aimed to delivering our strong FinTech capacity and financial experience to empower other financial institutions, which has greatly promoted the whole financial industry to serve more people and to realize their financial availability for most of the customers. So it's a kind of inclusive finance. Currently, it has served more than I think 85% of all the Chinese commercial banks and also the major banks. And I heard that they are doing a great job in Singapore as well. So I'm looking forward when Connect can play a fantastic role in other parts of Asia and even the other parts of the world. And then secondly, I want to share another example, which is called Lufax Holding. It just go IPO in I think in New York. Actually, it's another part of our inclusive finance role because Lufax is a kind of technology-powered financial, personal financial service. Just now, One Connect is to business, and Lufax is to customers. So currently, Lufax has served is nearly 50 million clients, and 1/3 of the clients, they are the active investors. So it's a kind of to see inclusive finance products we have developed. Then my last example maybe is about our AI ESG platform. It's not a company, but we are going to put more efforts on the ESG platform, because if you're looking at the ESG investment in China, because just now Judy has also mentioned we are in a great lack of the fundamental data, and we don't know which data is useful or the data is accurate. So we leverage our technology on ESG data. Currently, we have finished the development of the platform. It has two functions. The first one is to help the company to do their internal ESG management, such as they provide the online ESG data collection and the sign-off process. This platform has actually accelerate our internal annual report, which is our ESG report, by 22 days in this February. You know, this February is was the most serious period because of COVID-19 in China. But our reporting cycle was accelerated by 22 days. So you can see technology do play a great job. Then another function for the AI ESG is to support our responsible investment. Now this platform can provide you all the A-listed, it is China A-listed company ESG rating on a quarterly basis. And we have just launched it with Xinhua Finance last weekend. So we are going to share this useful tool to all Chinese investors and also the overseas investors who are interested in China market. Yes.
Thank you, Crystal. You also mentioned, of course, the role of data, and we're definitely going to come back to that later on because I think it's really front of mind for everybody on this panel. But you also, besides the products that you highlighted, alluded to some technologies that might be particularly helpful. And I guess earlier you mentioned robo-advice, for example, as a really powerful tool to help folks gain control of their financing and align their investment decisions with who they are and what they believe in. What sort of technologies should we pay particularly attention to as we think about the role of digitization and technology in the delivery of SDGs? Are there technologies that are more important than others and that might be more helpful here? Aiaze, maybe we can start with you.
That's a very... Sorry, go ahead, Crystal, and then I'll just follow. Go ahead, please.
It's okay. You go first. I'm going to add that later.
Yeah, so I mean, obviously, this is a very complex question, and there's a whole range of technologies in many different ways. When one thinks about automation and sort of real-time decisioning, it's all about artificial intelligence and machine learning. And there's a range of issues that need to be considered when it comes to these types of technologies. Obviously, they carry their own biases, potentially. They can be very powerful in driving efficiency and more inclusion, but also in many other ways, they can also drive exclusion through biases, and particularly biases when they're trained on data sets that don't pertain to the environment where they're being used, but data sets that are foreign from other places and other markets. And I think these are the type of issues that we are now really grappling with in this space in terms of addressing some of these biases. And of course, because they're based on data, you can't disconnect the AI layer with the data layer. So there's issues around the algorithms themselves and how they're designed and whether there's biases that are very often unintended, but that do exist. And we've heard a lot of recent cases with major platforms around some of these biases. And there's also questions of data. Who holds the data? Who owns the data, and data concentration issues. And there's a lot of debates going on right now about global platforms around market power, et cetera, and data concentration. These are the type of issues that we are facing today. And I think the only comment I would make on this is it's really an issue of governance. It's an issue of self-governance to start with at the company level in terms of how your corporate governance arrangements are actually addressing these things. And it's an issue of international governance. And there's a lot of gaps here at the moment. There's no international data regulator in a sense today. And so these are sort of the new gaps we are seeing in the international governance space as well that would need to be filled. Thank you, Guy.
Thank you, Crystal. You also wanted to come in on the technology component.
Yes, I think just now he just mentioned the AI ethical and the AI governance is very fundamental during our journey to SDG goals, because we are going to create an equal world. But AI maybe play a not very positive impact on the journey, even though it is very good role. So yeah, I just want to emphasize this topic during our SDG, the way to our SDG goals. Besides, I do want to mention, apart from AI, machine learning, or the remote imaging, blockchain is actually another very useful kind of technology to empower the data collection and also to make the data more trustful to the investors. But blockchain can only be well used by such as the government or the local government. Actually, we are working together with some local government to leverage blockchain to create the green finance platform in China. So I think it's very promising because I think you have heard of the currently in China we are putting a lot of efforts. I mean, the government putting a lot of efforts to green finance and the carbon neutral. So I think under this policy, a lot of the local government or the central government, they are going to create more platform which is useful for green finance or ESG investing in the coming years. So we think during the journey, we should take good use of all the technology we have, but we also need to put attention to the technology governance and also data governance. Let's
stay on that point for a second. Not only was thinking about data and who controls data and where does the data sit, but also some of the other trade-offs that we might be facing. And Aiaze, you're the expert. But what I thought when you mentioned, for example, the shared use of resources, be it vehicles, be it office space, particularly in the shared use of transportation modes, that's great, but it has implications for workforce, for example, right? And of course, that touches on a different sustainable development goal. And particularly in California, for example, that debate is very, very hot right now. How do we think about these trade-offs? So we want to leverage all the benefits that technology can bring to this space, but there might be unintended consequences. When we think about data centers, of course, they have a vast carbon footprint. How should we think through that, and where is that discussion at the moment?
So yes, I mean, and that conversation about trade-offs is a much broader conversation in relation to the SDGs in many different ways. The pursuit of one particular SDG could affect another one, and then technology and digitalization and platformication, in a sense, brings its whole range of issues. And so if you think of it, any major digital business, whether it comes from e-commerce, social media, from ride-hailing services and industries, as you were referring to transportation, whether it comes from payments, from search engines, any major global digital business will have very positive effects on the SDGs and could have negative effects as well. So if you think of e-commerce, for example, it's really a driving force behind access to credit for SMEs and access to online markets for SMEs. But at the same time, if you're an SME that receives credit against the assets that you trade on that platform and those assets are not exportable, that means you're locked in. And if you're locked in, it means you're also vulnerable to pressure on your pricing, competing products from affiliate companies of the e-commerce platform, et cetera, et cetera. And then, of course, through the extended supply chain, that platform might also have, or the e-commerce platform might also have impacts through third-party resellers and the entire supply chain on the environment. In the same way, ride-hailing services, since you were talking about transportation, can actually really be a driving force behind the financial inclusion of millions of drivers that now get access to payments, credit, insurance, are able to earn a livelihood. But at the same time, as they scale, you might see that they increase their commissions, wages get suppressed, working conditions worsen, you don't have social protection. And so in many different ways, we're always having to manage that fine balance between the positive effects and the negative effects. And in my view, the only way to really effectively address this, obviously, is through governance. And we've talked a lot, I think Crystal a lot has talked about the ESG frameworks and sort of ESG-based governance of large companies. There's also obviously external regulatory and governance frameworks that apply to a number of companies. And I think it's really understanding all these impacts, and particularly, and I'll just conclude with that, what I mentioned right now in terms of e-commerce and ride-hailing is just looking at them from the perspective of their financial services offering, but then they also have a core business, right? And their core business itself could have a lot of impacts. There's been recent study and research that shows that ride-hailing services actually create more pollution, more air pollution than the trips that they displace through the sharing economy. And so in many ways, we're starting to discover all these different trade-offs, and it's really a very deliberate approach to governing these trade-offs and setting priorities that will allow each country, depending on where they find themselves and what their priorities are, to get the most out of these opportunities and also mitigate as much as they can the negative effects. I hope that answered your question, at least partly.
It does. I want to come back to the platform issue in a second, but let's shift gears for a second. And Judy, I want to come back to you, because we talked about the role of businesses, of entrepreneurship a lot in the delivery of the SDGs. But of course, there needs to be a policy environment in place that is supportive. And you alluded to tax incentives, for example, early on in this discussion already. How can policymakers create a supportive framework for the advancement of the SDGs? What models do you think are particularly successful from a public sector perspective? I have to say at least once, but you're on mute.
Thank you. It's a good question. So let me introduce the situation in Asia Pacific first. So because in Asia Pacific, there are many countries, many governments already take actions on putting the SDG as one of their important agenda on national regulations. For instance, we can say we're starting from China, because China, selected 3 demonstration cities to be the SDG pilot. So Shenzhen, Taiyuan, and Guilin. So these 3 cities represent different meanings. Shenzhen to promote the high technology, the innovation, the FinTech solution, the new technique to support SDGs achievement. Taiyuan usually is a middle city and contains a lot of iron steel factories. So Taiyuan is meaning to work on environmental protection, to reduce the traditional energy sector, and how to do the climate transition. And Guilin is a famous tourist city. So Guilin is standing for ecosystem protection, the social impact, and also linking with the contribution to different SDGs, like the securities, local peace, like their local development, and etc. So this is the 3 pillars of SDG development in China. So very interesting. In addition to this policy, China government also issued a series of green finance and sustainability policies in the recent 5 years. So the China government issued the green bond, and also to support the green credit, and also to support the green investment by public fund and PE fund, etc. So this is policies and regulations released in China recently. And for Singapore, because we are now talking at the Singapore FinTech Festival, Singapore MAS also issued several policies. Earlier this month, the government, the MAS, had just announced the consultation paper regarding the fund managers to conclude climate-related risks. And also, Singapore MAS trying to promote green finance products in Singapore to attract more issuers to issue green financial products, and also to promote the investment here in Singapore. And Hong Kong, we can say Hong Kong just announced this consultation paper for fund managers related to climate as well. So in this consultation paper, we can see the Hong Kong SFC required fund managers to build up the governance, the ESG committee or ESG group under the board of directors, and also encourage them to do their ESG risk management to control the environmental and social risks, and then to improve the ESG investment. And of course, ask them to adopt TCFD when they do the annual reporting. So this is for Hong Kong government. And in addition, we can see that this year, there were many countries announced their carbon neutral target, like Singapore, Korea, Hong Kong, Japan. Most of them, they announced the target by 2050. And China, as the second largest CO2 emission country in the world, they announced the carbon neutral target by 2060. So this carbon neutral target will also containing a series policies of climate transition. So including the carbon nationwide trading market to be established in China, and also other, additional carbon activities to be undertaken by large-scale international enterprises. So this is the policies and regulations undertaken by the government recently to promote the SDGs achievement. So I believe that these efforts taken by government will greatly improve the SDGs as achievement by 2030, for sure.
Thank you, Judy. And Thanks particularly for the examples here from China. Aiaze, I want to come back to you because you spoke about that earlier, right? How do you align an entrepreneurial agenda with a public sector agenda? And you mentioned where that alignment is happening. That's where success happens. We just heard some examples from mainland China, from Hong Kong, from Singapore. Are there any other examples you can offer where the interplay of policy and of entrepreneurial or business activity has been particularly successful in the pursuit of SDGs?
Yeah, I would say, I mean, it's really starting to happen gradually in different places. One of the areas where I do the most work in trying to align this is in Africa, obviously, and there's a major undertaking we're doing right now in Uganda in aligning ICT policies and more broadly innovation policies to the national priorities and national development outcomes that the country is seeking. We see some of that alignment happening in Europe in some of the countries. Netherlands would be sort of a good example of where it's happening. There's others. I haven't seen really a place where it's massively happening as a major success, as you were saying. We heard examples from Singapore, which I think is a place where there's a lot of things that are happening. And so, you know, depending on the countries and level of maturity and depending on where you find yourself, you see more or less alignment. And if this alignment has been happening, it's been very often, I don't want to use the word empirical, but I would say experimental in a sense. It's never been really fully deliberate and fully thought through in a sense. And what we need right now is a more systemic approach and systematic approach to this in terms of really understanding the power that digitalization brings and digital finance brings and harnessing that power towards achieving your national objectives. I'll just give you one example of a project we've been, UNCDF and UNDP, very much involved with in Bangladesh, which is about financing sustainable infrastructure. One of the problems or challenges in Bangladesh is that the annual budget for sustainable infrastructure investment is in the range of $20 billion. 2/3 of that is being financed through international borrowing and international financial and capital markets, with all the high costs that we know and the forex exposure that comes with it, obviously. And if you look at the domestic market, there's $20 billion of savings that are actually available to be repurposed and channeled through that. And one of the projects we're working on is trying to actually advance digital finance innovations and new financial instruments that provide liquidity, consumer protection, ability to aggregate small amounts of micro savings across tens of millions of people into a large pool of investable fund to be able to channel that towards financing of that infrastructure. And we're using blockchain to actually allow citizens to be able to trace in full transparency where their funds are being allocated. And that would allow citizens to actually choose if they want to fund a bridge, if they want to fund a school, a hospital, make a decision on what really matters to them with their money, and at the same time have the benefit of use, and there would be economic distributional effects by paying back dividends to citizens who will have invested. So I think it's those kind of more systemic and large-scale things that are starting to happen. It's just the beginning. I have a few other examples, but I don't want to be taking up all the time. But I think this is sort of starting to happen now in this space, and this is what we need to push forward, maybe a more aggressively in a coordinated manner, and that would make a huge difference in my view. Thanks.
Yeah, maybe we can come back to that at the end of the panel, because there might be a lot of entrepreneurs actually listening to this session who want to understand better of how they need to think about this and what tools they need to have in hand to be successful. Let's come back to that at the end of the session, maybe. Crystal, I want to come back to you. So you gave us some examples earlier of OneConnect, for example, of Lufax, very successful technology companies that were incubated, if you want, within Ping An. What role did policy or push by the government play as you develop these businesses? Was it important? Was it not important? And if it was important, like how did that play out as you built these businesses?
I think the reason why I developed this kind of business is firstly is because of the market. We do see a lot of the investors. Because almost every institutional the financial institution, they are going to do the digital transformation. So we think as Ping An has done this kind of job for around 10 years already. So we want to share this kind of ability to our peers. And from the policy view, we do have seen the government has direct a lot of the resources to other institutions and also the local governor to guide all the kind of financial institutions for digital transformation. Because if we do the digital transformation, that means the financial institution can serve more clients, which was not taken good care of in the past. So we believe as the SDG goals is penetrating very well in China. We think there are a lot of the positive policy coming in the future, such as in Shenzhen, because Shenzhen has just made the legislation on green finance, I think last month. So start from next year, January, all the financial institutions in Shenzhen, they have to do such kind of things.
Thank you. Yes, I want to come back to your notion of platforms and what role they play in this space. And 2020 has certainly been an interesting year in the startup and in the FinTech realm. Of course, the pandemic accelerated a lot of dynamics that were probably already underway before COVID hit. But the uptake of digital services, of digital payments, has certainly accelerated vastly, particularly in the West here. In the China context, you had that familiarity with these offerings already before the pandemic. But even here, these things accelerated. And that has certainly benefited, particularly the large fintechs and the large technology providers. For the smaller ones, this year was probably a bit more tricky, right? When you think about financing sources drying up, etc., there was a lot to maneuver this year. And the focus, particularly more recently here in China, but also in the West, has been on the big platforms and their role going forward. There's a lot of questions around how to regulate these platforms, etc. What role do these platforms play? And you already alluded to the challenge around data and who owns data. But what other dynamics should we think about when we think about the role of platforms in the delivery of the SDGs?
Thank you, Kai. So I think I probably preempted the question already in my previous response, but I think these platforms are becoming huge and systemic. I mean, that's one of the effects of digitalization that drives increasing returns to scale and the emergence of these global platforms. And one of the biggest challenges is that these global platforms are having cross-border spillover effects across a range of developing economies and across a range or spectrum of development outcomes in the long term. So I gave examples of, an e-commerce platform being able to solve the SME credit gap and the SME financing challenge that we have. But at the same time, it could actually have other impacts. And if you think of a major global e-commerce platform, for example, in the US, that might decide during the times of sanitary crisis to prioritize the household essentials for the US market, that might impact hundreds of thousands of SMEs sitting in the other parts of the world that are part of that supply chain, just as an example. If you think of other platforms coming from social media or from governments or from other spaces that want to launch digital currencies, private, for example, that might have a lot of positive effects, but also some downsides in terms of stripping developing countries of their macroeconomic tools and monetary policy tools in many different ways. And I think one of the biggest challenges right now is they could actually play a massive positive role in advancing the SDGs, but the governance and the regulation of these platforms is now moving beyond just financial regulation to touch on broader data governance issues and digital governance issues around cybersecurity, data privacy, data governance, biases in algorithms, market concentration, market power. And then it's gradually leading us to the market monopoly conversation as well, which is one of the big conversations that's happening in different jurisdictions right now on antitrust legislation and other issues related to that. And you see all of these things are very connected in a way, because in the end, what we're, and one could make this argument, in the end, what we're talking about is whether really these platforms are serving the people and the small businesses that use them as users, as consumers, as borrowers, as lenders, as traders on these platforms in the way that they should, whether they're serving society at large and our longer term objectives in the way that they should. And so in essence, if you strip off all the legal jargon and all the technicalities of digital governance, etc. It's really about how well they're serving society. And many different jurisdictions come to this issue from a different viewpoint, and they use different tools to challenge these platforms. And I think what's needed right now is to connect all these dots between financial regulation, digital governance, and broader aspects around competition and antitrust, etc., with the way they serve society. And if you look at the other side of that spectrum, connect the ESG conversation with a broader SDG conversation, because these are different standards, different metrics, and connect all of these. And if you are able to have a governance conversation that's much broader in terms of the range of topics that we address, in terms of the stakeholders that we bring around the table, in understanding and agreeing on these definitions and these views, and we could use the SDG as a framing device for that conversation, we would be able to advance governance innovations that would, again, maximize the positive impact and minimize the negative effects. In many ways, big platforms can amplify impacts and effects, positive and negative. And it's really about harnessing the positive aspects of them. So, it's not about demonizing them necessarily, I would say. They can also drive a lot of positive outcomes. It's really about making sure that the governance framework that allow for that are in place.
Yeah, thank you. We're moving towards the close of the session, and I want to focus the last 5 minutes that we have together on the question of data, because it was raised by all of you. Maybe we can just go around the virtual table that we're sitting around here. Judy, maybe I start with you. When we think about the importance of data in the delivery of the SDGs and the role of data in facilitating ESG investment, how can we improve data quality? How can we make sure that data is accessible and gets into the hands of those who want to make investment decisions that align with the SDG, ESG agenda?
Yeah. To improve the data quality is a crucial topic for both ESG investment and SDG achievement. So when we say data, we need to think about the two things. Number one, to reporting the data in the scope of the company. We cannot only pick up the headquarters of the company, or we only pick up one branch offices or two enterprises to report the data. We need to make sure that the data will be in line with the annual financial report, meaning that the data cover the entire scope of the group of the company. So this is the scope of the data. That's the first thing. The second thing is a comparison. So the data need to be calculated into different KPIs. So we should calculate these environmental KPIs, social impact, governance structures, representatives, and etc. And this data will be able to present a full picture of this company's growth. So this data will be able for the responsible investors to make decisions and better understand how this company performs from perspective of a long-term value. Yeah, so this is for the data. When we do our usual business, we usually provide the technical suggestions to the company.
Thank you. Krista, do you have any additional ideas on data? 1 minute, please, very short.
Okay. Maybe I want to separate the data for ESG and also for SDG. It's quite different. For ESG, the data is used for the investor to assess, to give the evaluation on the corporates. So we cannot purely rely on the ESG disclosure from the corporates. As the investor, we strongly encourage to do a lot of the stewardship engagement to get more data, the accurate data from the corporates. So on ESG investment, it's not only about technology, but also the investor themselves. They have to build up the ability to dig the useful information. But for SDG, we do believe the government can put a lot of efforts on it, because now we are not lack of data. We just it's just the public sector, they don't have the access to the data from the central government. So if the central government is going to achieve the SDG goals, they can just allocate the different data from different bureaus together and to make sure the platform can link to different parties. So if the government is doing things in this way, we do believe the SDG data is quite easy to get and to achieve our final goals.
Perfect. We have to end here, and I think we could take this conversation on for hours. But I want to thank our three panelists, Aiaze, Judy, Crystal, for this very insightful discussion. We unpacked ESG, SDG. We talked a lot about the power of digital technology to deliver on the SDGs. We mentioned some of the trade-offs that we probably have to think through more over the coming months and years. And we talked about the importance of the alignment with the public sector agenda. Thank you to our panelists, and for now, goodbye.